this is what it looks like to go 5 miles off the blacktop. It has been raining here. This is Gamaliel, Arkansas. Super nice gravel road. I gotta tell you, I got an email today from Mail Chimp. Mail Chimp is what I use to send out our newsletters and stuff. This is a little bit of a on top of the censorship video I released earlier this week, late last week, whenever that was. First of all, I just want to say with regard to that video, I did mention some other channels in that video, and in the same breath, I think I mentioned QAnon because I was talking about the censorship. The other channels that I mentioned they're not QAnon channels. They don't have anything to do with QAnon. My point of all that was, once they start censoring and knowing that they are coming after conservatives, once they find that they can censor without reprisal, and that, you know, nobody speaks up and nobody fights for those being censored, then they know that they can go further and further and further with that censorship. So basically the email that I got from Mail Chimp today said, and I was super surprised because basically it said, we reserve the right to not allow you to send an email based on any topic that we feel is inappropriate. Okay, so first of all, I was like, wow, that's really a lot of power. And then I thought about it and I'm like, wow, so you read, you AI scan, whatever you do, every single email that's being sent out over your server? So I don't have any hope. Not that I need it, but I'm just saying in general, I don't have any hope of privacy with, you know, anything I send out to my own subscribers. There's no private conversations, right? And again, why I get so upset, and the point I was trying to make in my video, is that they pick and choose who and what to censor, right? So they're not censoring pedophiles. They're not censoring child porn. We know that for a fact because we see stuff about it all the time on Twitter. It's up there. It's out there. They're not censoring that. But they're going to censor QAnon, which they deem a conspiracy theory, and any other conservative thought that they don't like. And it's just a matter of time, especially if Biden wins this election, before you can no longer talk about the Second Amendment, protecting yourself, First Amendment is eroded, and then whatever else they deem is, you know, hate speech or offensive or whatever. They're the ones making that decision arbitrarily because they can. So that was my whole point. I think there was some confusion that maybe I was saying some of these other channels, Bear Independent, for example, was a QAnon channel, and that's absolutely not the case. Like, Bear, I think, is probably anti-QAnon. and never talks about it except to tell people not to talk about it. So it was a little confusing in the way I worded that, though. But my whole point, again, was that once they start censoring, you know, one group of people or one voice or one thought, and nobody stands up for it, to it, against it, it's just a matter of time before they come for you. And some people, that was my other point, and that's why I use Bear as the example, because he has a big channel. Some people, you know, make at least a part of their living off of their Patreon accounts, their channels, you know, no matter what they do with it. Maybe they take all that money and put it in their ministry. That's great. Maybe they take all that money and pass it out, you know, in support of their MAG or building houses or whatever they do. The point is, if these companies can arbitrarily decide they don't like what we're talking about and shut us down, then you lose all that income. It's just gone. Another little thing just to mention, I was looking over stats today. I know I talk a lot about the pressure here as far as we don't have a lot of inventory, which is absolutely true. There's not a ton of inventory, but there's still a lot of really, really nice homes and nice property. If you can spend anywhere over $150,000, you can get a super nice piece of property with, you know, most likely at least a 2-bedroom, if not 3-bedroom, nice house. You could get a great big piece of property with not so nice of a house, or a smaller piece of property with a great house, or you could get a nice sized piece of property with a nice house. I mean, there's definitely options out there. You just have to understand that the days of getting a really nice house on a nice piece of property for under $100,000 are probably gone for the foreseeable future. But there's still a lot of beautiful homes and beautiful property. You just have to be willing to pay for it. I'm currently working with about 7 active buyers. That means we're actively looking. I don't have anybody in town this week that we're out showing properties. Hopefully, I might have one coming in this weekend. They're not for sure. It's way easier and more effective, and we'll actually get somewhere if you can get here and we can look at properties together. Or once you are approved or have funds released to buy, if you're planning on buying without being here to see it, then I can do video tours for you. I only do that for people who are ready to buy, just because of the time constraints. If you want to try and buy before you get here, it is definitely worth your while. If you're not going to use me, and that's perfectly fine, use a realtor who understands what it is that you're looking for, understands that you're a homesteader or a prepper or plan to live that kind of lifestyle, so they can do a good job on the walkthrough of pointing out the appropriate features and non-features of the property for you. Just keep in mind, about 80% of folks who are in real estate because they're salespeople. They just want to sell you something. It doesn't matter to them if it's going to work for you in the long term or not. They just want to sell, sell, sell. That's what it's all about. I purposefully don't take on a ton of clients at one time because I want to try and service everybody the best I can. I'm going to be very honest. The thing I'm having the hardest time with right now with keeping up with is all of the people who they call me up or email me or text me and say, hey, we're thinking about moving there. This is what we're looking for. And I've been on Zillow and here's 86 properties. Can you tell me all about these different properties? So first of all, I have to go through and see which ones are still available. Most of the time, the majority of them are gone because Zillow is way behind. then I have to look through everything and see if it's going to work for their type of financing. VA and USDA are my two favorite types of financing because they're zero money down, and at the same time they're also some of the most difficult to get financed on the properties themselves, because neither the VA nor the USDA will sell properties that are in bad, poor condition. The houses pretty much have to be completely move-in ready for them to finance. So I get lots of people who are like, I have $125,000 pre-approval for a USDA loan. Here's these 10 properties. I want to look at them. And out of those 10 properties, 9 are not going to be financeable. Some of them will be financeable if the owners are interested in making repairs, but you know, that's always a challenge. And you have to pay for the home inspection and you have to pay for the appraisal before you can even get to that point in the negotiations. So if you're looking for a fixer, if you want something that's going to need any kind of work, you're going to need to go most likely conventional, maybe FHA, or of course with cash you can buy anything you want. If you are a low-end shopper, if you have a tight budget and you're doing VA, VA is my favorite loan by far. I'm going to tell you that right now. I love the fact that they take great care of the veterans and they won't let them buy a piece of crap. And at the same time, sometimes the things that are wrong that the VA won't pass are so silly. It's like, well, if you just let me move in, I could fix that in a week. But they won't. They're very strict about some issues. So, for example, whenever Randy and I bought our first house together many, many years ago, VA, it was in Oregon, and it had lap siding. And the people who lived there had a dog. And the dog had chewed through 2 pieces of the siding, just at the very bottom. Aside from that, the house was in really good shape. The VA would not loan until that was repaired. So fortunately, we made a deal with the owner and we just ran over there and fixed it ourselves because we were 99% sure the deal was going to go through. But you know, if you make a deal like that and then the deal doesn't go through, you know, you're out money. So there's just so many different things, aspects, things we have to look at and consider. So this, folks, is the house that we've been working on, the client's house. Took us 15 minutes to go 5 miles. I was going pretty slow. I probably could have knocked 5 minutes off, but it would have been so bumpy you wouldn't be able to see anything. And here we are. I had to leave the big house to run to the Home Depot for the guys. And I thought, what an ideal opportunity to shoot another video on the home buying process, because there is always so much confusion about that, and I am dealing with some of that confusion with clients right now. So I thought, oh, I will shoot a video talking about this on the way back, so at least the scenery is good. And I did shoot the video, but something weird happened, and when I tried to play it back, it plays back in at 1/4 speed. And the entire video was 20 minutes long, and it says it's 1 hour and 52 minutes. So I might try again. And I realize I'm leaving the Home Depot. I realize this scenery isn't as pretty, but there's going to be some really nice scenery all the way back to the big house, because I go over Lake Norfolk and then we go through Gamaliel, and it's just incredibly beautiful. So if you don't want to hear me talk, but you do want to see some nice scenery, sans the windshield wipers, stick around and, you know, maybe mute me and play some good music. Oh, folks, it has been rainy and soggy here. We're on day 2, and I guess it's going to go into tomorrow. My chickens are not happy. Our construction crew is not happy. I'm kind of happy though, because, you know, Mojave Desert for 7 years, and I'm really thoroughly enjoying the weather. So let's talk a little bit about the truth about home buying when you are the buyer. I get lots of people calling me and texting me and emailing me saying, hey, I'm ready to buy a house. I touched on this on the other video. Oftentimes they've been looking on Zillow. They're very excited, which I totally get. And that is really putting the cart before the horse, okay? Because we don't even start actually house shopping, physically going out and looking at homes until you have been pre-approved for your loan and we know how much you have to spend. Now, if you're a cash buyer, this of course does not apply to you. You know how much cash you have. Don't forget that you have closing costs. Don't forget that. People often forget that. In fact, these zero money down loans, people often think that means they don't have to have any cash, and that is not true. You still have to have cash because you have closing costs and you have incidentals that come with the loan. So we'll talk about that a little bit as I go over each loan. Now let me preface this by saying I am not a lender, so I am talking to you about this from a realtor perspective. As the realtor, my job is to manage all of these different parts and pieces. Everybody thinks it's all about just going out and showing houses and having fun, but that's actually the smallest portion of what I do, right? So what I do is I work with you and your lender and your home inspector and the seller and all those different parts and pieces and help everything go smoothly from making the offer, finding the house, making the offer, to negotiating the offer, to keeping apprised of everything that's happening throughout the life of the transaction, renegotiating if necessary, and then getting you through close to get your keys. Okay, so I have to know a little bit about everything, but I don't want to know too much about anything because I don't want to be outside my lane either. So this is how it works from a realtor's perspective, okay? So if you have cash, you're all good. If you have cash and you are ready to buy, please call me. Don't bother to email or whatever. Call me or text me and say, Beth, I've got cash and I'm ready to buy within the next 30 days. If you are ready to buy within the next 30 days, we got to find you a house now. Okay? If you're financing and you want to move within the next 30 days, we need to find you a house now. If you're already pre-approved. If you're going to finance and you're not pre-approved and you want to move within the next 45 days, we got to get you to a lender now. Actually, you're a little late to get to a lender. In fact, how soon should you get to a lender? You can start reaching out to a lender 90 days before you really want to move. Because maybe you have some credit hiccups and they need to help you get that worked out. You're going to need a little bit of time for that. Okay, so before we go look at houses, you have to get approved for your loan. Because we have to know how much house you can afford to buy, and we have to take into account everything that you need from down payment through closing costs and make sure you have enough money to do all that. We got four main types of loans that we work with in this market, okay? Now these are loans. So you got cash. Cash is cash. Talking about loans now. If you are a veteran of the armed forces or had served in the Coast Guard, a couple of other things I think, can't remember off the top of my head, I am certified in this, but it's been a minute. You most likely qualify for a VA loan. VA is what is called a no money down loan. You have to be a veteran in order to qualify for that loan. Okay? Regular civilian people cannot qualify for that. In these parts out here in rural America, the civilian no down payment loan is a USDA. Okay? Both of those loans require zero money down. As I said, you do not have to have a down payment. However, you will have to pay for your home inspection, and you will have to pay for an appraisal. Okay? That can be a total of anywhere from $800 to, I don't know, $1,200, somewhere around there. And then you're going to have closing costs. I'm going to talk about closing costs more a little bit later. But you're going to have some cash for that. Okay? So, while you do not have to have a down payment, you do still have to have some money. Now, here is the catch with both VA and USDA loans. Because there's always a catch. The catch is, neither of those loans work for fixer-uppers. Okay? The Veterans Administration is going to make sure that any home that they back the loan on is in good condition and safe for their veterans. They do not want their veterans to end up in a piece of crap house. And because of that, they have specific guidelines. The VA appraiser will come out and look at the house and will determine, going over the lake now, and will determine if it is actually in good enough condition or does work need to be done on the property in order for them to allow the veteran to go forward. Same with the USDA. USDA tends to be for people in rural America that maybe do not have super high income, and they want to make sure that poor people don't get ripped off. So, while it can be a little frustrating because they can say things like, you cannot buy this house because the porch railing is bad, and you're thinking to yourself, well, if you would just let me buy the house, I could fix the porch railing. It can be a little frustrating. You have to understand that they really do have the best interest of the buyer at heart. Okay? Next, we have the FHA loan. FHA tends to be for folks who either are credit challenged or lower income. It allows folks with lower credit scores and lower income to get into housing. You do have to have a down payment. Generally, it's 3.5%. So if you wanted to buy a $100,000 house, that's $3,500. You do still have to pay for the appraisal. You do still have to have your home inspection, and you will have closing costs. So on a $100,000 house, your total cost to buy are going to be probably somewhere around $6,000. Okay? Here is the downside with the FHA. FHA requires mortgage insurance, and that can be from $100 up a month. It used to be, before the crash in 2008, that you only had to have that mortgage insurance for a portion of the life of the loan. Basically, you make all your payments on time for, I think it was 2 years back then, and they drop the mortgage insurance. Now it is for the life of the loan. The reason this can be very problematic is because of affordability. It can cut down on your buying power and the amount of house you can buy, because they figure that insurance payment in kind of as a debt, if that makes sense. So instead of buying a $125,000 house, you might only be able to buy a $100,000 house because you're going FHA. Okay? The last one that we deal with is conventional. Conventional financing is generally for people who have pretty good credit, make fairly decent income. You are going to have a minimum down payment of 5%, can go all the way up to 20%, and you will still have your closing costs, loan fees, all that kind of stuff. Okay? Now, if we were in a buyer's market, it's often very easy to get closing costs included. We can get the seller to pay for closing costs. Because in a buyer's market, There's way more houses available than there are buyers, so sellers are generally willing to negotiate. Unfortunately, we are not in a buyer's market. We are in a hardcore seller's market, which means for every property, there's multiple buyers who want to buy it, which means sellers don't have to negotiate as much. Now, does that mean that we cannot get your closing costs covered? Not necessarily. I have some clients I'm working with right now. We're getting ready to close on theirs, and we were able to get the seller on paper to cover the closing costs. But the way that we did that was that we raised our offer on the house. So these are not the real numbers, these are example numbers. Let's say the house is $100,000 and closing costs are $3,500, and you don't have $3,500. We would go to the seller and we would say, Mr. Seller, you're asking $100,000. We'll give you $100,000 plus $3,500, so $103,500, and you give us $3,500 back at closing to cover our closing costs. So while on paper the seller is paying the closing costs, you're actually financing the closing costs into your loan. Okay? We can do that as long as the house will appraise for the amount you need to finance. So going back to that same example, if Mr. Seller said, yes, I'm happy to do that, and we get the appraisal back and the appraiser says, I'm sorry, the bank will only loan on the house for $102,000, well now we're $1,500 short. Where's that $1,500 going to come from? In a seller's market, they're probably not going to lower the price for you because they've got other buyers standing by. There's backup offers. So those are the kind of things that we have to take into consideration. And because of all of those factors, we do not shop for houses until you are pre-approved. We know that you can get the loan. We know that you're not going to have any trouble paying your closing costs and down payment if necessary. And we're fairly confident the loan is going to go through. Then we start shopping for houses. I'm going to share with you another big issue that I'm seeing here. Gotta take a sip though, I'm talking a lot. My throat's getting tired. Because of the state of the nation, and because so many people that are trying to get to the Ozarks right now are coming here, basically just leaving their lives to start over here, here's an issue that we're encountering. If you need to get a loan on your house, you have to have a job. So if you quit your job to move here, you don't have a job. And therefore, you cannot get a loan. Lenders look at your job as continuous employment. So you must have 2 years of continuous employment in the same field to get a loan. If you are self-employed, it's really not a problem most of the time because you are self-employed. You can do your job anywhere. Randy and I were self-employed. He's a contractor, I'm a realtor. He was a contractor in Las Vegas. I was a realtor in Las Vegas. He's a contractor here, I'm a realtor here. We get a loan based on tax returns, right? We have to be able to prove that we have income. Oh, That's very important. I'm going to talk about that next. So, if, let's say, you live in Minneapolis, and in Minneapolis, you are a snowplow driver. That's how you make your money. And you want to get out of Minneapolis because it's bad shit crazy there, and you want to come to the Ozarks. Well, how are you going to get a job as a snowplow driver here? Because we only get like a half an inch of snow a year, and we don't have snowplows, mostly. I mean, I think we have a couple, not very many. So that's not going to work. The lender is going to look at you and say, I'm sorry, Mr. Snowplow Driver, but how are you going to have a job at your new place? And you're going to say, I'm getting out of snowplowing and I'm going into wood chopping. I'm going to be a professional woodcutter, because I hear a lot of people there have fireplaces, and so I'm going to cut wood. And the lender's going to say, well, that's nice. Come back and see me after you've cut wood for 2 years, and you can show 2 years of profit as a woodcutter. Okay? So you are not going to be able to finance a house here. So that's a problem we're seeing. You either have to have money to come here, or you have to be going into the same type of employment, and if you're not self-employed, already have a job lined up. I sold a house about 1.5 years ago, maybe 2 years ago now, to a gal in Las Vegas. She was from California, and in California she did weaves, hair weaves. And she was great at it, and she made a good living. And it took a little bit of finagling, but we were able to get her a move to Vegas, because guess what? People in Vegas need hair weaves too. So, lender was on board with that. Oh yeah, you're going to have the same job, you can make money, you can pay back the loan, it's all good. Self-employed folks, however, have to be able to prove that you have an income. Another thing we ran into a lot in Vegas, because there were so many service industry folks, right? Wait staff, valet parkers, things like that. And a lot of those folks make their money on tips, but they don't want to report those tips to the government. So they have stocks of cash, piles of cash, and they'd be like, hi Beth, I would like to buy a house. I have $10,000 in down payment. Here is the picture of the stacks of cash under my mattress. Yep, that doesn't work, because the banking industry and the feds require the money to be what we call seasoned. It has to be in a bank account for a certain amount of time. And you cannot just stuff cash in your bank account and call it good, because again, that's not seasoned. And almost all this came about during the Patriot Act. Thank you, George W. Bush. Because, they were trying to make it so that foreign entities, corporations, whatever, couldn't come here, launder money, all that good stuff. Guess what? They can still do it, and it just screwed the average American. That's all right. A lot of folks who are self-employed tend to write everything off on their taxes. So on paper, it looks like they don't make any money. Guess what? You can't buy a house like that. The bank has to see that you actually have income. So a couple of years ago, bank statement loans came back, which means you can use your bank statements to prove that you have income and not your taxes. But last I heard, those are 10% down payment loans, and they come at a much higher interest rate. So if a VA buyer is getting, money at 2.8%, bank statement loans might be getting it at 5.5%, which is still good, but not near as good as other ways. The other thing, anytime you're trying to get a loan that you have to take into account is your debt to income ratio. They take into account how much debt you have versus your income. Now, we do not carry very much personal debt at all, but what we do have a lot of debt is student loans. Lots of folks have that, right? We both have student loan debt. Before the crash, the last time we bought a house, it didn't matter because the feds and the banking industry did not count student loan debt against you. It was not included in your debt to income ratio. Now it is. Again, that was after the crash. They made that change. I hear that it's coming back to the point where they're going to be removing that again, which woohoo, that's awesome. And that is truly what keeps a lot of people from homeownership because of that freaking student loan debt. There are other ways to buy, which, you know, we will do if we have to, but we would really like to be able to use this VA loan. What other things count against you in debt to income? Car payments, credit card payments, bank loans, personal loans. I believe they have stopped counting medical debt because after the Obamacare fiasco, so many people had medical debt, they stopped counting that. But let's say you make $80,000 a year and you're renting, and your rent is $1,600 a month. And you've got utilities, and you've got a couple of small credit cards, but you and your partner each have a fancy car, and your car payments are another $1,200 a month. Whenever you go to buy a house, that's really going to hurt you. Those car payments kill when it comes to buying a house. So those are the kind of things that you will need to talk to a good lender about, have the lender help you figure out you know, the best loan type for you, what's going to work with your income and your debt and that kind of stuff. And that all needs to be worked out when? Before we start house shopping. Because the worst thing that happens is I go show you houses and you get your heart set on one and your lender comes back and says, oh, you bought that new car last year, and now instead of a $200,000 house, you can only have a $125,000 house. And now you hate every $125,000 house I show you because the house you fell in love with was a $200,000 house. So we don't do that. We don't go look at houses until we know for absolute certainty that you can afford to buy, that you can get the loan, that you have all of the cash you're going to need for down payment, closing costs, all the other stuff. And then don't forget, you still have to move. And that's it. That's really what it's all about when it comes to buying a house. If you're not ready, but you're close to being ready, as in you need to be with a lender, let me know and I can hook you up with some local lenders. If you're moving here from out of state and you have a lender who's helped you buy a house before, please understand that not all lenders can work in every state. So there's a good chance that, you know, your favorite lender, I have a favorite lender from Las Vegas and I cannot work with them because they don't sell loans in Arkansas and Missouri. But the good news is I have another great lender that I've already done several deals with here. She's really good. She'll take great care of you. And I've got some other lenders if you need different products. So let me know. We'll get you started. And then we can help you get moved in. Do you know there's still plenty of time to get moved into your new beautiful Ozarks home before Christmas? Like, the holidays are coming up, but we still got time. But you got to get on it. Thanks for listening to me. I hope it was helpful. Please like, comment, subscribe, all that good stuff. And I'm going to be quiet now and let you enjoy this beautiful Ozarks drive out in the woods in the rain.